All right, there we go. Hey, we're here. Sorry for being late, guys. Had to get Amar the link. And my software, I'm moving slow, or my software is moving slow because in Georgia right now it is, what is L temp? The temperature is 43. It feels like 37. It's cold out here. Oh, baby, it's cold out there. And didn't that get me too'd out? That song, It's Cold Outside. Hey, we got Kim, Patty, and Nancy. Que paso? And so because it's cold outside, the software is moving slowly. Not my fault. Not my fault. All right, so let's see what's going on here in Texas today. So Bernie, Texas, it's 37 degrees right now, but it feels like 32. So in South Texas, they're getting by, which is good. But tonight is going to get down to 27 with ice and snow. So that's not good, everybody. Then tomorrow will be 25 degrees in the morning. And if they can survive one more day, they should be good to go by, well, no, Friday the lows could be 19, but Saturday they should be back in the mid 40s. So they should be able to survive by then. 17 in Wichita. Whoa! R.I.P. No! Rush Limbaugh just died? Oh, no. Yeah, someone's on the, I saw that, Kim. I'm not on WhatsApp. That's not me. I'm not sure. I gotta. Oh. Hold on just a second. Oh. Man, that's hold on just a second. What's FR? I don't know what FR is. Yep, let's see. Oh. Ugh. Man. Well, we're gonna have to say a quick prayer. Heavenly Father, we pray for Rush Limbaugh. We pray for his families. We're just grateful for him being in this world of ours. Man, we know he's with you. We know you're opening the doors to heaven, saying, "Good job, good and faithful servant." And that's all we need to hear. If we hear those words, we know our life has been worthwhile every step of the way. But having the happiness of my dogs behind me and what Rush Limbaugh has done to me is, oh my goodness. I'm brokenhearted, man. I'm not gonna lie to Finny. Just It's hard to say prayers with Phineas in the background. Man, we're just gonna pray in Rush's name. I'm praying in Jesus' name. Pray for Rush in Jesus' name. And his wife Catherine. Finnegan, Finny, stop. All right. Well, Amar's not having any success getting on here. I don't know what's going on. All right. So while we're waiting on him, so when I got out of the Army in 1992, and I went to Virginia. I went to my dad was in Virginia, my mom was in Maine, and I went up to Virginia. When I went to Maine in April of 1992, and when I was in D.C., G. Gordon Liddy was on talk radio. I remember listening to him and Rick Edelman. As a matter of fact, Rick Edelman was on the weekends talking about investments, which was pretty interesting. And G. Gordon Liddy was talking during the weekdays on the election stuff. And we also had a guy, WMAL, called Mark Davis, who has since moved to Dallas. And like I said, I never trusted Mark Davis because I was part of the Buchananate Brigade, and Mark Davis called us Nazis. It was crazy. I was like, wait, you're a conservative calling the Buchanan Brigades Nazis? I said he represented a huge proportion of the voting populace. I didn't trust Mark Davis. I still, as far as I could kick him, unless he changed. I don't know. But anyway, point being is Rush Limbaugh never. Point being, I drove up to Maine. I'm listening to G. Gordon Liddy, and I was telling my mom about G. Gordon Liddy, and my mom said there's a guy named Rush Limbaugh. Now, my mom is a left wing. She's not a right wing at all at any stretch, but she's always been open minded. She's a hippie, for heaven's sake. I'll never. This in April 1992, man, and I just remember sitting there. I think I was like mowing the lawn for something like that. I can't remember, but I said I'll turn them on, and I said, oh man, and just like everybody, Rush Limbaugh was saying things that he was like speaking to me directly. You know what I'm saying? And as such, I just became loyal, and I never forget going back to when I was in Virginia. You know, as my first one of my jobs before I went to college, I was loading trucks at UPS, and so basically what I do is I sit in my dad lived in Alexandria. I sit on the back porch drinking some beers before I went to work, listen to Rush Limbaugh. And I knew by the time Rush Limbaugh is off at 3:00, I had, because my shift started at 6, I'd have to stop drinking, if that made sense. I didn't get lit, but I'd drink a couple of beers, just, maybe catching some rays, just sit on the back porch, listen to Rush Limbaugh. This is in 1992, April, May, June, and going on until school started back in whatever, August or something like that. And I just remember he said, "Don't vote for Pro." I had a big Pro on my Pro bumper sticker on my car, and Rush was like, "Ah, man, Pro is he's Rush's Pro. He's whatever." And he said, he's talking smack. He can't vote for Pro, all that. And he had all these funny things on Perot. It was actually pretty funny. We're waiting on Amar to get on here. I'm not sure what's going on. I sent him the link. I'm not sure why it's not going there, so we don't know what's going on. And I don't know what's happening. So we'll just go until he gets on. Everything. My website's down. Everything is just jacked. So maybe it's who knows? I don't know what's happening. But anyway, so he's calling. You not having anything? All right, so I'll just give you the URL. You ready?
Yeah, it's www.
Well, of course, StreamYard.com. Yep, hold on just a second, folks. StreamYard.com / let me just turn this off for just a second. See if that works.
It says enter in broadcast.
All right, cool. There we go. All right, so Mars getting on here now. There we go. All right, so all right, so hold on just a second, Mar. All right, so anyway, back with in 1992. So I remember just listening to Rush Limbaugh on the way up to work, before work, I'm saying, and then I've been listening to that guy since 1992, folks. 1992. I was on his app. I bought all his books, the whole thing. The guy just had a huge impact on my life, and just hearing that died at 70 years old for cancer. It kills you. It kills you, man. Cancer is just damn. Just actually, it's funny. Not funny. It's ironic. We were doing the live stream when Ruth Bader Ginsburg died. I remember someone said right here on the live stream, I better look out, man. Anytime I do a live stream, someone dies. It's not good. So, all right, so more to come. Anyway, so say a prayer. Look, Rush Limbaugh's, look, man, everyone knows somebody who's affected in some regard by cancer. And I don't want to make light of all the other people for sure. But just Rush Limbaugh was one of those guys that had a big impact on my life. That's just a fact. And as such, it hurts me deeply to find out he died. It's heartbreaking to me. And at the end of the day, it's, but you get enjoyment from the losses that you have. It's like C.S. Lewis talks about. The reason there's sorrow is because there's joy. You can't have one without the other, if that makes sense. That's why you gotta, read C.S. Lewis. Just read your apologist. Man, you can't just, if you read this stuff, you're like, why is there sorrow? Because there's joy. You have both. Anyway, all right. So hopefully my dogs will pipe down. Anyway, all right, so good. We finally got you on here, Amar. Fantastic. Next time we'll get you the link well in advance. I mean, I don't know if it's my email. I don't know what the hell's going on, man. But I got your email you sent to me. So let's just go ahead and bring that up here. Hold on just a second, because
you probably have servers in Texas or something.
Well, that's literally where my website is. Did I already tell you that, or did I already tell you that, or did you already know that? I told you that.
No, I was making a joke.
Oh, because that's true. That's true. My server, apparently the server for my website is in Texas. Exactly. So I was like, whoa, that's funny that you said that, because that's exactly what I've been told. All right. So today we're going to talk about stock options. All right. So for executive compensation stock options, I'm going to try to get this. Oops. There we go. All right. Hold on a second. Let's go. All right. There we go. All right. All right. Hold on. We're going to share screen. And we're going to share. Oh, nope. Time. And hold on just a second. Why can't I share this here?
You want me to open it on my side?
Yeah, you open it tomorrow. Yeah. Yeah, my wife just texted me, everybody, about Rush Limbaugh. Yeah.
So it should be asking you for me to, if I can share my screen.
There we go.
There we go.
Yep.
Now we're rocking. So apologize for the delay.
Nah, it's not your fault. It's mine. So it's not Amar's fault. That was mine. Just can you make it bigger, Amar?
I can, but then it cuts off the page. Let's try like. Is that good?
Yep.
Yeah. So before we get started, our disclosures. Again, we haven't taken your specific situation into account. This is mainly for educational purposes, and we're just looking to have fun, right, Jeff?
Yeah.
So we're going to go through 5 top tips regarding stock options. So before we start that, I got in my book here that I was reading earlier, is 6 reasons for providing stock options, right? So like the first reason is to restore benefits lost under qualified retirement plans because of the IRS limits, right? So stock options give employees the ability to own part of the company in a tax advantage way for the most part, and these are not benefits that are risk guided. So there are 409A tax plans to provide executives with overall greater benefit. I mean, so basically to help employees get more benefit than what you can traditionally do. And this also, I would say, provides an option to have a retention factor for mid-year, mid-level executives or mid-year career, in the sense that there's a vesting schedule with most of these stock options that we're going to talk about. And so let's just get into it here. So I guess since I'm controlling, I'm the one that has to click the next page, right?
Yep. There you go, man.
So there are mainly 3 different types of stock options that you can get. There's ISOs and NSOs. Those are basically, ISOs are given to employees, not like board members or anything else like that. And then you have NSOs that are given to other individuals that could be helping in the firm, but are not necessarily an employee, i.e., sometimes you'll see this with big firms that hire consultants, and they'll pay the consultants in NSO as part of their compensation. And so we'll go through a couple examples of ISOs and NSOs here in a bit. Restricted stock. I mean, this is
Why don't you actually say, though, what ISO stands for and NSO?
incentive stock option.
Yeah, exactly.
And non-qualified stock option plans. Restricted stock. So remember, stock options, you don't actually own the shares, right? In restricted stock, you actually own the underlying shares. So there's a big difference on that piece there. And then you can have restricted stock units or performance shares or RSAs. This is probably more common with startups or with companies that are privately held. Another way to look at it is that there's a pool of shares, and the owners or the executive team own all that pool of shares. And how do they divvy up those shares, or how do they create more shares and spread that out throughout the rest of the workforce there? So, with all these things, there are options. There's risk with volatility in the actual company's stock price. Shares, the value of shares can go up, they can go down. When Josh gets back here,
I'm back right now. Here we go.
All right. I'm gonna if I go like this, can you see this? What do you see there?
I just say you.
Okay. Let me try sharing something else. I wanted to give an example, or
Definitely not our best work here today, guys, but
yeah.
There's a lot going on, obviously. So this is it's just one of those days, man. But we'll burn through it, man, and hopefully you'll get some value out of this for sure.
Yeah, actually, let's just go through the slides first, and then I'll go through an example at the end. Because you're right, today's going to be a little bit all over the place, right? Yep. So here,
let me share it with you. Let me share. There you go.
Yeah. So here, going back to this, is like there's volatility in terms of the company shares. There's could be also, in my opinion, worst case scenario. What if the shares are worthless, right? And you pay taxes on the bargain element earlier on, and then the shares go down in value. So there are a lot of things that you have to consider. One of the other things that you have to consider is risk. And risk is a big piece of this, in the sense that for most people that are getting restricted stocks or stock options, you have to consider your future income is based off your employment. Your current savings is based off of your employment. And now you're putting past, or your savings, which is past stuff, and back into your company stock, right? So you could be taking excess amount of risk and putting too many eggs in one basket is what I would say there.
Yeah, definitely. I mean,
so
Yeah, no, keep going. Keep going.
The next thing here is that when, and we'll walk through an example of this, but if you exercise your stock options and then you sell them right away, you could have an AMT preference item, and that AMT preference item will affect your taxes in that given year. Now, you can get some of that back later in subsequent years, but just want to make sure that we cover that you could trigger an AMT preference item with stock options. And then I'm going to actually draw a diagram for that, so we'll skip over that. So here's one of the things. ISOs are given to employees only. And one of the benefit of that is when you exercise an ISO, there's no tax, right? However, if you're, let's say, a board member of a company and you get an NSO, you have to pay ordinary income on that when you exercise those shares. And so an ISO is a good way to get benefits directly to your employees in a tax advantage way. And if you hold the ISOs from 2 years from the grant date and then 1 year since you exercise, that's all taxed at long-term capital gains. And so, depending on where the tax rates are in the future, because everything's constantly changing those last several years, and but traditionally, long-term capital gains rates have been lower than ordinary income. And then, this is one of the things that you may want to consider is that when you have your future income, your current income, and your past income all in the company stock, you may want to create some protection around that concentrated position. And Josh, you've seen this in our world that most people, or the traditional answer to creating protection is to sell it. Yeah. Create a taxable event and then re-diversify, right? Yep. Which is one option, but it may not be the best option for you, right? Because you may be in high tax years when you're getting these options, and you may want to defer this decision to when you have a lower income bracket. And so you can use options to create a collar. So if the stock price goes up, you won't participate. If the stock price goes down, you won't participate. So you kind of lock in that value, if you will. You could use prepaid forward contracts, which allow you to create tax-deferred positions from a concentrated share. So you gather with other individuals and defer your taxes by diversifying your positions. And so let me go into an example here real quick. Josh, I'm going to stop sharing.
Great.
So I found this tool.
Excuse me. Don't really have much to add today, Amar. It's one of those days, man. Just sad. I'm sad. So if you just blow on through and do what you got to do. And
can you see my screen, or can you share my screen, please?
Yeah, there you go. There you go.
Yeah. So I'm going to try to draw this out. I found this tool online that allows me to draw. So let's say in 2020 you get hold on. So let's say you get granted so it's not too bad, but let's say we get granted some ISOs, for example, and let's say we get granted 1,000 shares. So when you get a grant of a stock option plan, oh God, how do I delete this? I don't want to click on anything and go to a different page. So the two things that happen at grant, you get a number of shares and then you get an exercise or strike price. I just want to use round numbers. So let's just say $25 a share. So we got 1,000 shares, $25 each. And typically when you get a grant, you have 10 years to exercise those options, right? And there's also a vesting schedule. So let's just say this one is 25% per year. So in 2021, you get 25% of these shares. So that's 250 shares, 250 shares, 250, and then 250, and put 2024. So when you get this, once you get granted, you don't do anything, and you just basically wait until some shares vest. So this is our first set of shares to vest, right? And then at this vesting period, you have an option, right? You basically have three options, right? You can hold, sell, or do nothing. I wonder if I can scroll.
Oh, might go to
No. Yeah, this is a new tool. Maybe we have to get like a drawing software or something to draw. This has commercials on it.
That'd be one we do a little bit differently. I just this might be some. Let's just open up for questions on anything, Amar. This isn't probably the best model here, just because we start off kind of late and a lot of things going on and stuff. We could do this a little bit more efficiently, I think, in a different environment, if that makes sense, where we got everything organized to some regard. I think you do. I don't, to be honest with you. It's not yours, me. It's not you, Amar, it's me, if that makes sense.
Or the whiteboard, if you want to draw this out on the whiteboard. Let me just, I guess there's three key points that I want to make sure that we cover. And then after that, let's open it up to questions.
Yeah, right on.
The first thing I would say is that with ISOs, you can get them and then you can sell them right away. And if you do that, you get what's called a bargain element, right? So let's say here these shares are worth $50 a share, right? 50 minus 25 is $25 times the 250 shares. That's going to be the bargain element. If you have that, that's going to count as ordinary income, right? If you exercise the shares and just hold them, as long as you hold it for 2 years from the grant date and 1 year after you exercise, that's going to be long-term capital gains. And then the other thing that I was going to cover is that what if these shares are not worth anything, right? And there is risk, right? And so remember, once you get granted shares, those shares will expire over a period of time. But you have, in most cases, up to 10 years to exercise. So I remember I was working with some Bank of America executives in 2008 and 2009, and this was a big concern for them.
Yeah, totally.
Yeah. I don't know if you want to.
All right, so here's Alan. If I sell stock and pay long-term capital gains and move the proceeds to a Roth, do I have to pay additional taxes?
Sorry, could you say that you can't move it to a Roth, right? Because
it sounds like you just say if you sell stocks, not even ISOs. Let's say, but if he sells stocks, he pays long-term. Yeah, as long as you have earned income. Alan, there's a lot going on there, man. I mean, so Amar, the question is, if I sell stock and pay long-term capital gains and move the proceeds to a Roth, do I have to pay additional taxes? No, not necessarily. But I mean, you can't just contribute $1 billion to a Roth. I mean, you can only contribute what your earned income is. Anything to add to that, Amar, by chance?
No.
Yeah. Roth is an unlimited contribution. Just always remember that.
Yeah.
We'll do another one on this, Amar. We'll do another one focused solely on that. Maybe that would be that might be one where I get I got that whiteboard right there. I don't have my lavalier yet. I was supposed to get it. I think I was supposed to get it today. So I want my lavalier because it'll be that way you can hear the mic a little bit better, if that makes sense. You got something like that, a whiteboard?
No, that's why I was trying to use this online tool.
Okay. Hard to draw this stuff online, though. You know what I'm saying?
Yeah, and like I have this mouse pad thing like this.
Yeah, I got that. Well, something like that too. I don't like it. Do you have to do NUA in the tax year you retire? All right, Mar, there you go. Do you have to do NUA in the tax year?
No. Well, I'll say depending on your plan documents, on average it's no. It's when you roll over your funds out of the qualified retirement plan. And for example, when my dad passed away, he still had his 401k. And then my mom did an NUA when she moved the proceeds out of the qualified retirement plan. So my dad was retired for a couple of years. So
is unemployment earned income? The way this year is looking, I might not be able to contribute if it's not. I don't think it is, right?
I don't think it is. Nope.
Didn't we have some question like that last week? I remember, but I just can't remember I can't remember the exact. I forgot what it was. But unemployment is not. I don't think it is. But it seems like we had something that was considered. I forgot what it was. Yeah, not a big crowd here today, man. I guess incentive stock options and stock options aren't a big draw. That's for sure. So if you all have questions, I mean, just open the mic. Again, this is not Amar's issue. This is my issue. We just I forgot to send the link for some reason. I thought, I don't know. I just forgot. And then my software again. My website is still down. What the hell is that about? And it's just a cluster fark. And then hearing that Rush Limbaugh died, that also just takes the wind out of my sails for sure. I do want to make a point. So it's interesting just because Amar's. I remember when Amar was dealing with his own dad dying and stuff, and it's one of those things that, when people like, I was just let me go off on a tangent here, Mar. But did you feel like with your folks that you had, is your mom still alive?
Mm-hmm.
Oh, yeah. Did you feel like when your dad died, you had everything, that you accomplished everything you wanted with him? Did you feel like, 'cause my dad's still alive and I don't have a relationship, and it's not about him. I just, did you feel like, oh man, I should have went to a San Diego Padres game or something like that? Anything like that?
Yeah, like the list of regret. I think it's there for everybody.
Yeah.
I think one of the things specific to my situations, my dad was in and out of the hospital for so long, right? Yeah. So like the default was that like, oh, my dad's going back in the hospital, he'll come back out, he'll go back in and go back out. And so the level of urgency or seriousness, I just simply didn't have, when
that's interesting.
Yeah. And I think it's part of the healthcare system, like what they do is they put like these Band-Aids on problems, right? And then they like extend your life, but the quality of life, keeps changing. And so
was he Alzheimer's or something like that? Or can I ask like what
no, yeah, he had cancer, just like Rush did here. So he had lymphoma cancer in the intestine. So it's
that's the thing about our medical industry. It's caring, not curing. And I obviously can't cure cancer. I get that, but it's so focused on giving you stuff instead of curing your health. It's just like we'll care for your health and not require. And I'm not saying it's the context of Rush Limbaugh with your dad or anything. I'm just saying our healthcare system is. Jennifer says she agrees with your analogy of Band-Aids that we want the quick fix as opposed to the cure, if that makes sense.
Yeah. Or the root problem, right? Like, they solve for this the ailment instead of the root problem, right? And I think that's, healthcare. There's a lot of a lot of things that are good and a lot of things that are bad in the U.S. specifically. It's just we all need to come to the table and say there's a better way to do this.
Well, it's a money-making enterprise. That's for doggone sure. You know what I'm saying? So Nancy says, if your stock is worth 6 times your cost basis, is NUA probably the way to go? What's your thoughts on that, Amar?
there's several variables.
Depend on the stock too, right? I mean,
yeah, it depends on the stock. It depends on, are you planning to re-diversify to low risk? Are you planning to use the stock to generate cash flow? I mean, there are a lot of variables there that that you would have to unpack. But I would say, if you're taking 6 times your basis out, and remember, you don't have to do all of it, right? You could do some of it. You can do a partial NUA. There's some options there as well with that.
But you got to factor in the stock too, Nancy, because remember the issues that if the stock is pretty volatile and has some shaky, you might not be 6 times your cost basis after 18. What do you got? Wait, 13 months, Amar? Is that what it is? Or wait, so you pull the stock out, the stock itself comes out as long-term capital gain, right? And then
when you pull the stock out, that's ordinary income.
Or that's okay, right?
From the cost basis, and then day one, when it's in the non-qualified account, is long-term capital gain.
Oh, so you'd have to wait a year, not like a stock. Okay, there you go. All right, so in that case, you're pulling out as ordinary income, and if the stock drops in value 40%, we just pay tax on ordinary income on a stock that's not 40% less of value. If that makes sense, that could be the risk.
Yeah, and Nancy, I have a video coming out tomorrow about NUAs, and I walk through an example and the taxes around that. So,
do you know how to do the premiere on that, Amar?
No, you got
what time you get? So you need to do the premiere, and the reason why is that way people can ask you questions, and you're not actually doing the video, but you're just typing. You can answer the questions while your own video is running, if that makes sense. It's actually a real good tool, man.
Yeah. Don't know how to do it.
All right, I'll show you. It's easy. All right, so we got Double Hoff says, "Are you anticipating a stock market crash or correction?" I'll say I am. Let Amar talk. I am, because it always crashes and corrects. It always does. So I'm 100% anticipating a stock market crash correction without question. How about you? Got anything to say to that, Amar?
Yeah, I mean, so nobody has the crystal ball.
That's not true. That's not true. I have a crystal ball, but it's cloudy.
Yeah. And so, and maybe one day we'll do a video together, Josh, on just like how we manage money as like our firm, because, there could be some good back and forth with that type of conversation. But, we use GDP and inflation as part of our risk management strategy. And within that, the government's about to print another $1.9 trillion, right? $1 billion. So like, that's going to be a lot of
liquidity.
Yeah. So, I mean, I think to say that there's going to be a pullback, yes. Do we know if it's this year? We don't know, but maybe third, fourth quarter of this year, I would say that like we'll have to see what the numbers come with. And, the problem is that you can't just keep printing money. I mean, and we're starting to see interest rates go up, right? And interest rates mean, some of the stocks will start to become overvalued.
Well, the issue is, there's always a correction. I mean, this frankly just bores me because yes, there's always a correction. Always, if you're investing in stocks, I don't care if it's a 1982 all the way up to 1926. It matters not. There's always going to be it's the nature of stocks, man. And as such, if you're not prepared for it, then you shouldn't be in stocks. Now, on the other hand, people say. They'll say, "Oh my goodness, there's gonna be." I did a video yesterday, Amar, said prepare for a 50% market decline. Not because I say there's going to be a 50% market decline, but I say there will be a market decline of some significance. And when that happens, are you going to be prepared for it? Because it's going to happen. And I just say, look, but you got to put it in context. Where were you 5 years ago as opposed to where you are today? And I can almost assure you, if you've been in the S&P 500 for simplicity, you are well above where you were 5 years ago. So 5 years ago, you're here. Today, you're here. A 50% market decline just puts you here. That's it. Just puts you right back to where you were. You're not, that's the context. You're not going back to 1982 prices. So always be prepared. Absolutely. And if you're about to retire, you need to have some money on the side so you don't have to spend that now. But
yeah, liquidity. you need to have cash on hand. So, so James, what do you?
Let me real quick. Nancy says she has Walmart stock. So a couple things with NUA that Amar, and I don't do this, but Amar can do is help to mitigate the risk on those specific stocks with options and things like that. Do you want to elaborate on that by chance, Walmart?
Yeah.
Walmart, Amar.
So if you want to lock in that value, we can use a collar, which is using options to give somebody else the right to buy or the right to sell. And we can lock in that dollar value. And I guess, Nancy, it's not so much as a crystal ball to know for sure. It's that, what do you want to do with those proceeds? Like if you're just going to, if you like Walmart and you just want to hold it forever, then it totally makes sense. Yeah. But if you're going to need to live off of some of that money immediately, or you're going to need to take a little bit out per year, that's where, like, I guess there's a dial, like how much of it does it make sense? So I would just say.
My man James says, what do you think about variable annuities with Vanguard and now Transamerica is taking over them and Vanguard still managing funds with an annuity? Any thoughts on that, Walmart?
So the only type of annuities.
I'm going to go get my dogs. Once they keep talking.
We only have fixed annuities. So variable annuities play a place. I don't know the internal fees on the Vanguard Transamerica annuities. Some of these annuities, they have these riders that have certain benefits, but you're paying a high premium on those. And so not 100% sure. Variable annuities, you typically in the accumulation stage tend to make more sense because you're invested in growth.
I'm not the biggest fan of variable annuities, and I will make an argument on blue in the face that if you're going to get one, it should always be inside an IRA. And everyone and their mom says, don't do that, and they're wrong. Because what happens is a variable annuity, now Vanguard won't have as much fees on that, but what's the point? In my opinion, what happens is with a variable annuity, because they're so heavily weighed down because of fees, that it doesn't get the same growth that you'll get in just a good old-fashioned index fund. And as such, what happens, I've seen this a million times a Sunday, someone will drop $100,000 in a variable annuity in 2007, for instance. Come here. Good boy. And then, in 2018, it'll be worth $170,000. 1 second. Who's that? Oh, okay. I didn't realize you're still here. Anyway, so then in 2017, it's worth $180,000. They haven't made that much money relative to what the market did, and so they want to get out of the variable annuity. If it's non-IRA, it's $80,000. It's taxable as ordinary income. They can do it what's called 1035 exchange, but then you're just right back to where you were, putting another annuity. So, man, I tell you, you want an annuity inside an IRA. That way you can switch it out to a non-annuity product without having to pay ordinary income when you make the switch. It's a big mistake people make, man, and they're getting sold on annuities. Like Amar, you probably know this. Like they'll get sold on the income benefit as if it's a cash value, a walk away amount, and it friggin' drives me crazy.
It's a phantom dollar amount.
It's exactly.
Yeah, the cash.
You get it. You get 7% guaranteed. And I'll tell the lady or whoever's being sold, so that means in 10 years, literally in 10 years, I can walk away with twice what I put in. Well, no, exactly. It's not guaranteed. It's an income benefit is guaranteed. It's not the dollar amount. It drives up the wall. Anyway, yeah, James, you're not getting off topic, man. That's a good question. See, if I may. A lot of watching guys on, do videos and on YouTube and blogs and stuff. This is cathartic for me. Literally, I like being live stream. I like being on here because I actually get enjoyment. But doing the videos is cathartic. With Amar on here too, it helps him build that video muscle. You see what I'm saying? He's relatively new to the game, so he needs to build it. But once he does, he'll be providing good, valuable advice as well via YouTube. And I think it's a good thing for to keep burning through this. All right, so James said he did subscribe to your channel, Amar. All right, so good.
Cool. Thank you.
Send me that sweet, sweet money you get on advertising when you get 1,000 subs there, Amar. Don't forget to subscribe to Amar's channel at Client First Cap Learning. Client First Cap Learning. Not that you're going to learn anything, but all right. So Nancy says she needs a crystal ball. Yes, you do. But just because you have it doesn't mean it's going to be right. Let's see. Okay. My $1 million in stock isn't what $1 million used to be. Ain't that the truth? I am on Subscribestar. Kim is subscribestar.com/Josh Scanlon with no space in there. All right, so here goes Kim. Amar, when you have a 401k, when do you move that into an IRA? Upon retirement or later? You want to take a stab at that?
Yeah, so I mean, this is the thing, is that you don't have to roll it over into an IRA, right? I know a lot of advisors want you to, because that's how they get paid on managing the funds, right? So sometimes you have to weigh you have to weigh the pros and cons, right? So some 401ks have a self-directed brokerage account within them, and you can have access to more funds than what's in the plan. And you just have to weigh the cost out. And if you want to self-manage, I would say maybe 7 out of 10 times, it probably makes more sense to keep it in the 401k, because then you have access to loans and other ERISA parts of the plan.
Well, got loans when you're separate, though.
No, you can still do I forgot what the term is, but you can access some of the funds.
Well, no, absolutely. So let's clarify that. So basically, once you are 40, once you're 55 and older, and you separate from service in your previous company's 401k, you have access to that. Sans, that's French, Amar, because I'm multilingual. Sans 10% penalty.
10% penalty. Yeah.
Exactly. As long as you keep it in there. So Kim, given that you're just a young whippersnapper, if you were to separate from service today, you do not want to roll that to an IRA. Frankly, I can't remember how old you are, but if you're 55 or older and you leave it there, you don't want to roll that to an IRA. You don't. It's nuts. And
then the reasons to roll it over into an IRA is really if you want to have access to more investment options that your plan may not have access to. And some of the plan options, in fact, I was reviewing somebody's 401k the other day. They have funds in there that they're charging 1%
crazy
on the funds and within a 401k. And so you can definitely find it cheaper on the outside that 401k plan. So
I was talking to I was looking at some 401k plans. I can't, index funds in a 401k, 75 basis points. I said, that's nuts, man. I mean, that's crazy. All right. So expenses on Vanguard funds, only 30 basis points, but here's what James says, 1.25 on the guaranteed living withdrawal benefit. So you got the GMIB, a GWIB, G whatever that is, and then
WIB.
yeah. So I mean, I don't think it's all that valuable, James. I mean, it's the riders that get you. And then Vanguard's probably not gonna have what's called M&E expense, but it's just I'll do a separate video on variable annuities because they get you every which way to Sunday. I've done videos before, but they just with that said, I sold them. I did, and I'm not ashamed of that. I sold them. I used Ohio National and Pacific Life had both variable annuities that if you put the money in year 1, you're guaranteed to get back at least what you put in year 10. Had a guaranteed return of principal, which I was fond of because at the end of the day, some people don't want to invest in stocks or the market at all, and to have that guaranteed, even though it's not cheap, it costs something, would at least allow somebody to be in the market as opposed to just being in the bank. And that's always a challenge. So,
and I kind of fight with that too, Josh, because I feel like if that person was working with a good advisor, the advisor would hold their hand through the market's ups and downs and have them properly allocated, that they would never feel like so to the point where they feel uncomfortable, right? Like that these products are created to fill, in my opinion, these products are created to fill an emotional need for a person, right? When the reality is, having a portfolio of stocks, bonds, and cash, right? And that combination, you can dial in what's comfortable for you, right? So,
what do you think about structured notes? You do any of those by chance, Amar?
We do some. We don't do a lot. The ones that we do, I would say, are not like your off the rack structured notes because the off the rack ones, you're going to end up owning the underlying securities, like a worst case scenario. And so you want to have safety parts, safety triggers put into those safety notes. So
you want to explain what, because I do get this question quite a bit, what structured notes are.
Yeah. How about we do another video?
No, that's good. Yes.
I'll pull up like a structured note database, so we can show like different options.
That's fantastic. Yeah. Oh, that's great. No, right on. Kim says you need to get a large whiteboard.
Yes.
Amar. Okay.
I realized that after drawing on here. I'm probably going to buy the same one Josh has. Yeah, I think that one looks pretty big.
All right. So James said he needed Josh and Amar back in 2000. He lost a lot of money. And Josh and Amar are worth every penny. Well, I'm raising my fees with that. All right. Kim says she called patients yesterday from a list of 7-year-olds and above. Half said they wanted to wait 4 to 6 months and see how everyone else does. I'm assuming that's the flu shot. I mean the COVID vaccine. Yeah. Dan, the tree man, says the fees seem a lot higher in my 401k than my Roth IRA. What are the advantages of a Roth 401k than other investments options? You want to?
Yeah, I mean, really, is if you're still working, you still have that loan provision that we were talking about earlier.
Yeah.
But other than that, most of the same bankruptcy guarantees and all that are in your IRA is in your 401k. So.
Yeah, I completely agree. That loan thing is a big deal. I think a lot of people overlook that because they're so, oh my goodness, you're gonna pay back taxes. You're not. You're not paying taxes twice. It drives up the wall. All right. People forget the IRS Rule 55. No with 401k withdrawal penalty. And just remember, if you live in Maryland or Rhode Island, there are benefits to leaving your money in a 403b, 401k. TSP as opposed to rolling it into an IRA too. You get less taxable income on distributions from employer plans than you do on IRAs. And I'm telling you right now, as Maryland in particular, because a lot of government workers, they have these big TSPs, and Joe advised, hey, roll that over here. And if he does that, he is making a tax mistake. It's crazy. I've done videos on that. Basically, if you name it, I've done videos on it, if that makes sense. I am on at 8 p.m. tonight on my Subscribe Star stream, Kim. 8 p.m. tonight. I'll put a link in my show notes, for the folks on my Subscribe Star. Subscribe Star is kind of like the free market version of Patreon, my friends, where you can support your favorite content creators. And mine's $10 a month, or if you want to pay $25 a month, I'll be happy to relieve you of that wallet. Putting it down. And I haven't been on there that much. I try to do 1 or 2 live streams a month for Subscribe Star only. I'm going to do that tonight, but I haven't done it that much this last few weeks. So I don't think I've done one since 2020. One is kicked in, but I will be on there tonight. All right, I got caught up in the Janus fund. Yep. Is a value fund. Yeah, I remember that. Yeah, right on.
Chasing technology.
Man, I remember first-hand funds. You might be too young for. I don't know if you remember those. Amar's just.
This is a good comment because, like, right now, if we look at SPACs, right, like everybody's investing in SPACs. I mean, that's essentially these technology companies, startup companies. Everybody's putting a lot of fund flow into there, and who knows how long that will last, and it could be the same thing like in the 90s, right?
Yeah, I'm telling you, man. Yeah, some valuations always. I mean, you can't escape valuations. Yeah, I mean, you just can't. At some point, it's gonna. I mean, it's weird. And right now we got valuations on some stocks are nosebleeders. Not the whole market, I grant you, but that's there wasn't the whole market back in 2000 either. I mean, just everyone says, "Oh, the .com," as if that represented the whole market. Large value stocks did fine in 2000, 2001. In 2002, everything got crunched, but I mean that was a normal correction, bear market for value stocks. Is 2000, 2001 that the growth stocks got crunched, but the reason they got crunched is because they had such a big run the 5 years previous. It's almost like identical right now. It's the weirdest thing, man. And But the interesting thing, Amar, was back then interest rates were much higher than they are today. So there was some dry powder that the Fed had to lower interest rates to kind of try to get, the economy back on track. And now those days are gone. I mean, I am looking at the 10-year Treasury. Right now it's at 1.27, which is, 100% increase from the low from last year. But the low was because of the Say again?
No. Go ahead.
I was saying, well, the low was the low because of the freaking coronavirus crap. Oh, yeah, ready to think. That's a good question, my man James. What you've been following this lady, Kathy Woods from ARC? What's your take on her?
Yeah, I mean, I don't know. It seems like the hot hand at Wall Street right now. Everybody's talking about ARC ETFs,
yes,
investments. I think her big bet was Tesla, right? This last year, and and it did extremely well because of that. But if you look at ARC's ETF history, year-over-year returns, there have been good years and they've also been bad years. So
it's funny though, Amar, with the ARC stuff. I'm like, how many times we go? Like, I got no qualm with Kathy Woods or whatever the hell the name is, or I don't have any antipathy and whatever it is, but it's the same story. First-hand funds, Janus funds back in the day, it's like the same thing over and over again. It's just everybody, the dogs of the Dow, the Nifty 50. I want to show you guys something. I don't know if y'all can see that. That right there is the yield on the 10-year Treasury. All right, so that's going back 5 years. 5 years. All right, so this is the interest rates going up right there. All right, but it's still below where it was. Let's see, it was still below where it was a year ago. All right, so February 3rd, 2020, the 10-year Treasury is at 1.78. Today it's at 1.294. So they have gone up, but they went up from going down because of the stupid pandemic reaction. So my man Pulverizer just threw $400 at a couple.
Yeah. And I would agree with that. Like, having some percentage of your portfolio geared to innovation and future technologies, that could probably make sense. But you don't want to put all your eggs in the basket, right? And so I would say that, innovation is really what would drive, some of the growth in the last year, right?
That's a 30-year Treasury. All right, so is that interest rates going up, or is that interest rates still well below where they were? That just seems to me like pretty obvious that that's well below where they were, and as such, going up is just kind of reclaiming the significant drop that they had to deal with the pandemic reaction. Crashes. Well, I think James, he was saying QE makes crashes impossible. That's Ralph Wiggum. That's impossible from The Simpsons. I think old Pulverizer was just saying that. Crashes are always possible. They'll always come. There's no getting around it. People want to do all this, that, and the other. The way to avoid crashes is, frankly, to not be in the market. But then what are you going to do? Yeah. All right, so we got cute humor, Amar, and Ed. Oh, good boys. He says, I put my Roth in iShares artificial intelligence and robotics ETF. Right on. All right, cool. I got no qualm with that. All right, Amar, we're up against the 12:30. So we'll do another video on stock options. I'm thinking actually.
Yeah, maybe we delete this one and just redo it again next week.
I'm thinking we won't even do it live. It doesn't seem to have a huge. I think we'll just do a video, just you and I kind of talking about it. How's that sound? All right. And then next week, what are we talking? And we'll put the thing in the show notes. What do we talk about next week? I can't remember. You got?
I don't have it on top of my head.
But next week we'll I'll probably delete this video. Frankly, it's not our best. It's because of you, Amar. Everything was perfect until you came on. No, but anyway, at the end of the day, again, Wednesday at 12:30 Eastern time. Every Wednesday it'll be Amar and I, and we're in the middle of our 13 wealth management strategies. Top of my head, I can't remember what week 5 is. But we'll figure it out. So be there. But we'll do another video solely on ISOs and RSUs and stuff, and we'll just put that out. It won't be live. We'll just do that, he and I, and we'll share that, in that way you can watch that at your discretion for sure.
Yeah, and the other thing that I was going to say is that if there's a younger audience that's watching that wants to know, like, what to do with student debt, what to do with, parental leave, maternal leave, like all the employee benefits type stuff. I'm gonna do something with another advisor. Remember talking about, Josh, like the basics of.
Right. Yes. So
that'll be happening. It looks like the first week of March we'll start doing that too. So
he's gonna be about for younger folks.
Yeah, like planning issues. So we're gonna start with financial planning for new parents. We're going to talk about estate planning basics like healthcare directives, wills, life insurance, just all the basic stuff there. Student loans and tax planning. So we're looking to do that, March, starting the month of March, one a week.
All right, good, man. That's fantastic. What's the dude's name?
Steven. He's Marine Corps.
Oh, so he's not that bright. Okay, so we'll make sure we get our crayons out. All right. So Nancy says don't delete. You're right. I'm not going to delete it. Actually, I don't like deleting videos just because I still make money off them. If people watch them, it might pay me $1, it might pay me 25 cents, and there might be some out there that people can find informative. So I won't delete it. But Mar, you can on your end, you might want to for sure. But on my end, I won't. All right. So again, I'll see you guys on Subscribe Star tonight at 8:00 p.m. And Mark, appreciate you being here. We'll check base off the line and we'll figure out what to do next. And then I'll make sure I give you the link in advance. Cool beans. Thanks, guys. See you.
Bye.